The National Association of Realtors settlement is about to change things for people buying and selling homes in America. Now, you've probably heard about this settlement and you know a little bit about the changes on how buyers agents commissions are going to be paid. If you aren't educated on that, I will drop a link to this new bulletin by the National Association of Realtors titled Home Buyers. Here's what the NAR settlement means for you. This is a very good overview of the changes that are about to go into effect on August 17th. But the purpose of this video is to really show you the ways in which you can pay a buyer's agent compensation. For the last 30 years, the cooperative compensation rule has put the onus of paying the buyer's agent commission on the seller of a property. Now that's not necessarily true. So I encourage you to read through this document, but what I really want to show you today are what are the ways that you can pay for your buyer agent compensation. So in the first vertical column here, we have a strategy where the seller pays for the representation of your buyer agent. And this is really the way things have been done for the last 30 years. In this scenario, you have a $500,000 purchase price, 20% down gives you a $400,000 loan amount. You've got a monthly payment with taxes and insurance included of $3,052, and the cash to close is $111,275. That's the 20% down payment, plus closing costs and the setup of your escrow account for taxes and insurance to be impounded. The next vertical column, the next strategy here would be that the seller doesn't pay any of the buyer's agent representation fees. So in that case, you would be left with coming out of pocket additional 3% if that's the agreement between you and your agent for their compensation. That means that the cash to close would go up approximately $15,000. But there's two other really creative ways to compensate a buyer's agent in the case that the seller isn't willing to contribute or isn't willing to contribute all of the buyer's representation fee. The third vertical column here shows that we would take the $15,000 or 3% buyer agent representation fee and we add it to the purchase price. So in this scenario, the seller says, nope, we won't pay any of the buyer agency fees. But if you want to offer $15,000 more, we can essentially give that back to you in the form of a contribution to pay for the buyer agent representation fees. In this scenario, you would essentially have a payment increase of $91.58 a month, and your cash to close would go up just marginally from the seller paying the buyer agent representation from $111,000 to $114,000. And that goes up, of course, because this is showing 20% down on a $515,000 purchase price versus a $500,000 purchase price. And the fourth strategy, which you'll find in the fourth vertical column here, is that we add the representation fee to the loan amount. So in this scenario, we have a $500,000 purchase price. We increase our loan amount from $400,000 to $415,000. And then, of course, in this scenario, that would trigger a little bit of mortgage insurance, and you're financing $15,000 more dollars. So at the end of the day, the cash to close is about the same at $111,000, but your payment is $131 more per month. So the point of this video is to communicate to you that things are in fact changing on August 17th, and it's no longer a foregone conclusion that the seller is going to pay for your buyer agent representation fees. And number two, there's more than one way to pay those fees. They can be paid by the seller, you can pay them in cash, they can be added to the purchase price, or you can finance them into the loan. If you have questions on this matter, if there's anything else I can do to guide you and your family successfully into the home of your dreams, I'm here and I'd love to hear from you.